Hey everyone, in this video I'm going to compare Alphabet stock to Meta Platforms stock, and I'm going to answer which one of these two growth stocks is the best one to buy right now. I'm going to start by looking at their most recent quarterly earnings results, and then I'm going to look at their long-term profitability, and finally I'm going to look at their valuation, and then I'm going to answer which one of these two is the best stock to buy. So let's start with Alphabet's latest quarterly earnings, which saw its revenue increase by 3% to 70 billion, but earnings per share fell to $1.17 compared to $1.23 year over year. Now that Alphabet's revenue growth has slowed, the company has taken measures to cut costs, firing close to 20,000 people. Those benefits will start to pay off in the company's profitability starting the back half of this year or maybe starting next year, as the company has to pay severance packages and retirement benefits and all sorts of costs associated with laying people off. Now, let's look at Meta Platforms, which saw its revenue increase 3% to 26.6 billion in its most recent quarter. Earnings per share of $2.20 was down 19% from last year. Meta Platforms too, like Alphabet, has undertaken significant cost-cutting measures, also laying people off, canceling lease agreements for office space, whatever it can do to try and cut costs, hoping that by the end of this year it can turn profitability around. Meta Platforms has an additional headwind compared to Alphabet in that Apple changed its privacy policy, making it difficult for Meta Platforms to collect data from users, which makes it harder for Meta to sell targeted advertising. Now, until Meta finds a workaround, finds another solution around that, it's going to be a little bit constrained in terms of revenue growth. So for that reason, it's good for investors that the company undertook significant cost-cutting regimes. And of course, longer term, Meta Platforms is investing billions and billions of dollars into the transition into a metaverse company. That remains to be seen what the benefits of those investments will be long term. Looking at these two companies' operating profitability longer term, Meta Platforms had for a long time operated at a better profit margin compared to Alphabet, although that reversed course in the most recent quarter, where Alphabet's trailing 12-month operating profit margin exceeded Meta's at 25.35% compared to Meta's at 23.6%. Now, depending on how aggressively Meta Platforms invests in the transition to the metaverse will depend on where Meta's operating profitability goes from here. If it reduces those investments, Meta's operating profitability could expand. Nevertheless, each of these two companies have excellent operating profitability. Anything above 20% is excellent in my book in terms of operating profitability. Finally, let's look at these two companies' valuations, and judging by the forward price to earnings ratio, they're trading very closely. Alphabet slightly more expensive at a forward PE of 19.6, Meta Platforms a little bit less at a forward PE of 18.72. That being said, if I had to pick one of these two growth stocks to buy today, I would likely pick Alphabet. I like Alphabet's near-term prospects better than I like Meta Platforms' near-term prospects. Longer term, Meta Platforms has that huge uncertain benefit that will come from the metaverse. Although that's a big question mark, Alphabet is starting to benefit from the rising effectiveness of artificial intelligence, although there is a risk that some of its search engine revenue could be impacted from competing AI platforms. So that remains to be seen as well. Given all of that, still I would pick Alphabet as the better stock to buy over Meta Platforms in this comparison here. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.